Hey everybody, David Skarika here, stock chart of the day. Gonna have some interesting stuff here. Yesterday was a great day for myself. We're gonna do actually that take a ride there. We're gonna talk about Argentina this weekend because I've been kind of pounding the table in Argentina for a bit, and Stanley Drunkenmiller recently started talking about how he was bullish in Argentina. But we're gonna talk about silver today. We saw the Dow up too. It looks like we might see like a breakout here in the markets. But silver was up huge. You can see the S&P was up 3.7%. It's up over another percent this morning. We'll quickly go into Kitco and see that. Yeah, you can see gold's up another percent, and I think silver's up another. Yeah, silver's you can see up another 34 cents. And now we're seeing it because remember this big breakout we've seen in precious metals prices. We've seen this with like essentially no increase in cost, right? It happened so quick. Like remember, this was the beginning of the quarter here, right? You can see the SLV was near 20, silver was in the low 20s, and you had this huge move. And even actually the early in the second quarter, this is another reason stocks are going up because the projections are getting better. You can see what silver did in April, right? But this is, you can see this move higher and then boom here. So this basically 2-month move has taken many of these things up 25, 30% on gold and silver. And what's happened is there's, the costs have basically been flat. Actually, oil coming down, which we talked about oil yesterday, but the energy oil costs are some of the biggest input costs for miners. So I know you like to be commodities bull and all of these different commodities, but actually, if you're primarily a gold and silver bull, which I kind of am, I have some oil positions, but I'm much more into gold and silver here than I am these other positions. It's like oil kind of staying here would actually be the most bullish scenario because again, a lot of those costs then would not go higher. But essentially that's it. You've seen this huge move, and essentially costs have been the same because the move has happened so quickly. It's a whole different world from where we were here because that's when the stocks were really depressed. So two stocks that had earnings yesterday. One that we actually bought nailed at the bottom. I actually essentially, and I know many of my subscribers own this, talked about this at $1.50 back in late February, and it's gone to 333. It's actually now I think the largest position in my portfolio because it's gone up so far so fast. Like I took an average position in it, but then when something more than doubles, and there was two stocks, like two smaller stocks I had that I kind of got rid of or really reduced my position, I should say, in. So this it's essentially is now my largest position. And like I've talked about, we'll show you in the past. So they had earnings, and you can see this huge gap up. It's up over 21%. It's up a little more this morning. And Pan American Silver was another. So you can see Pan American Silver too was up over 10% as well. And again, same kind of thing. So I think we're going to see more of this. Newmont had good earnings as well. So I think we're going to see more of companies saying, look, the prices of the underlying asset they're selling, gold and silver, is higher, number one. And then number two, like you said, when the price of your asset, the main commodity you're selling is higher and your costs aren't going up, that's pretty positive, right, going forward in these things. So what I want to show you with EXK, what's really interesting, and I've talked about this too, and again, in my kind of like paid version of the letter. But anyhow, we look at this and you can see that this is essentially most of this has been a secular, not secular, but yeah, it was a secular bear market in silver from 2011 to, really you could say earlier, like the actual low in price was 2016, but you can see the stock didn't do much, but you can see every time. So there's going to be a time period where EXK is going to go up longer, right? You can see only started trading, but you can see, yeah, when it came out in 2003, essentially the stock went up for 4 years. And other than when everything tanked in 2008, really you could say the stock went up for almost 8 years. So, and it went from being a penny stock to be, a 14, nearly a $13, $14 stock. So, but what you can see in all these moves since 2009, or even in the last, since 2011 when silver topped, when there has been a rally for the most part, 2015, 2016, 2020, 2021, is that you've got these rallies that last a year to 2 years, and there's virtually no pullback. There's a small pullback here in 2020. Again, that's kind of like during, or actually that was after COVID. I should say that. No, that was the COVID bottom here when everything tanked. So you can see there was a little pullback in late 2021, but pretty small. pretty short term, and then straight back higher. So like that's what happens here. You can see in the 2016 rally, there was almost no pullback. You can see again from 2008, again after the crash, to this top here, there was a consolidation that lasted about a year, but it wasn't really a large consolidation and then up. So, but what I'm trying to say is, like EXK, there's a couple other smaller silver companies that are like this. When they're in these rally modes, you just have these small little pullbacks. Like we saw a very tiny pullback. We'll get a shorter term chart now recently. And I was telling people to buy on this pullback. And then you can see this here kind of breaking out. So, so I just have a little drink of water here. And you can see that here, as it pulls out, pulls up, breaks out here. So that's basically it. So I'm expecting this to happen. So if this continues kind of the way it's traded in the past, probably EXK can go back to like anywhere from the $6 to $10 range, in the coming years, in the coming months, et cetera, et cetera. So that looks really good. And again, at some point we're going to have another rally like 2003 to 2008, or like, you could say 2003 to 2011 without the few months in 2008 when everything crashed with the market. And when that occurs, like this thing could go up for, this could go up almost to the end of the decade, basically, and who knows where it will be trading at that point. It went from 12 cents to $12, from 2003 to 2011. So obviously it's more easy for a stock to go up 100x when it's 12 stocks, or sorry, 12 cents. But this can go up, like this could go up to $50-$60 or something, especially if silver finally breaks out that all-time high of 50. So, and that's what we're looking at, I think, ultimately. Remember, again, people don't understand, like, you look at these past charts, but people don't understand, like, this is really going to be a debt crisis in the West. And we've never seen anything like this, where virtually every Western country has got way too much debt and is essentially insolvent. We've never seen anything like this in modern economic history. Like when France and Spain and those empires went bankrupt, the UK was solvent. The US was just kind of a early stage, a booming economy. Then when the UK went insolvent after World War II, the US was the big creditor. Even though it had a high debt to GDP, that was just because of the war. They had a lot of savings. That debt GDP came back down quickly because all that spending stopped. So you had like different sections of the global economy that were doing that. Now, granted, the BRIC countries don't have these debt problems, et cetera, but it's really like the Western countries are still the majority, of the global economy in terms of size, especially the US, and they're all in debt. So we've never seen anything like that. And the BRIC countries, of course, are all much smaller as well. And because a lot of the BRIC countries sell to these Western countries, it's going to affect them as well. But so that's what I'm just trying to say. So this is probably the start of something huge. And it's just another, for what John Templeton said, buy at the point of maximum pessimism. Now, I nailed this one. I don't expect to nail everything like this in the future. I've probably missed more than I've hit, but you only need to hit on a few. That's funny. That's the funny thing about trading, is if you hit on 5 trades your whole life, you're probably set for life. You can lose 95% of the time. You don't even have to be a home run hitter. A good home run hitter, hits 40 home runs a year on 500 at bats. It's one in every 12, or 600 at bats, one in every 15. A great quarterback throws 30 touchdown passes a year. They throw about 600 passes, 500 to 600 passes. So same thing, one every 20 passes or something like that. And you don't even need to do that I guess one in every 20, right? So I guess it's kind of like that as a trader as well. So, and that's just, again, the home runs or the touchdowns. You can have the short completions too, right? You can have the singles too, the stocks that you make 10-15% on as well. And you want to keep your interceptions or your strikeouts lower. But again, the best home run hitters strike out the most. I think Babe Ruth was probably the leader in strikeouts in the history of Major League Baseball when he retired. So, and who remembers that in the end, right? What's funny is, just to quickly end off on that note, you see that all the time, where like I was watching a documentary on Kyle Bass, and really Kyle Bass, he did somewhat predict the Greek and default and European debt crisis, the early 2010s. But I would say Kyle Bass has had like really the one big trade shorting. and his rest of the time, his performance has been pretty average to mediocre. But no one remembers that. They remember the one big home run that Kyle Bass had, right? So that's really all you need. Like, Soros does have a great history, obviously, year to year and outperforming the market. But again, what's Soros really remembered for? He's not remembered for a lot of that. He's remembered for the pound trade, which was his one home run type trade. Or Paul Tudor Jones, same way, one of the best traders ever. What's he remembered for? The 87, short. So anyhow, so I'm going to end off on that note, but it looks like, silver breaking out, some huge moves in these silver stocks. 21% of the day is nothing to sneeze at. And this is a mid-sized company. This is not some little junior mining stock. So, it's a great day. And what's really nice about these stocks too, maybe we'll show it here when we get the GDX up here, is you can see the GDX is essentially breaking out, on a close, this is the new high. Since here, we're almost going back to the highs of early 2022 now, right when the Russian invasion was going on, when gold and silver spiked. So what's nice about this move too is, we still have gold and silver below these recent highs, and the gold and silver stocks are breaking out. So that relative performance is picking up. And again, I think it's a lot of that is that cost structure where gold and silver are now going up much faster than the underlying cost of producing them. And that's increasing the prices of the shares. So this is great, man. Because look, I'm a human being, and being someone who is kind of known for being in precious metals, the last 14 years has been pretty bad. Since the 2011 top, 13 years, and the last couple of years were not good too, especially in a year like 2013 when the stock market goes up. And because I am kind of equated with gold and silver myself personally, like in terms of other assets or other factors of my business, like selling newsletters, consulting, etc., it was garbage last year in 2023 into early this year. So it's like it is nice to see things starting to pick up. Maybe we can make some money here, and all of us in the stocks, myself in the stocks and in my business, etc. So like I said, I did go through times of being depressed and that sort of thing. I think that's just natural, when these things happen. You can say you can't let the markets affect you like that, but come on, it's going to do that. If your business or whatever is affected by it. So anyhow, like I said, I think we break this 36, then really that 40 to 42 level, which is the highs of 2020 and 2022, is the next resistance. And then the GDX really could be off to the races. If we go all the way back to the high of the GDX, to show you this, you can see this is kind of a base off the 2020 highs that's lasted a couple of years. So you can see that kind of big run that happened from late 2018 for 2 years. So I think, if we use this here as a low here, we're only a few months, I would say, into this move that could last years. So, and let's go look at the GDX. You can see the all-time high in GDX about 60. So really, you break 40. I guess there's some resistance at this high in 2012 at 50. And, but then really, again, these highs here, 55 to 60 in the GDX, that's essentially the next, a resistance level. One thing you have to remember about gold stocks, just to finish off here, is I'll talk about this maybe in another stock chart of the day. They've really diluted. They haven't done stock buybacks. They have a lot more shares outstanding now. So a lot of them at, say, 40 GDX will have the same market caps they had at the last gold top or even higher because they have diluted. That's one thing you have to take into account, not just the underlying price action in the stock, but the fact that they have so many more shares outstanding that their market caps in a lot of cases are like that. Because, for example, I was in a stock called Paramount Gold, and this thing spiked to $4 back in 2006. Then Paramount sold off the company, and then they did a spinoff, but they sold off the company, and the stock went to about $4 like 10 years later, like 2014, 2015, 2016. And then, but at that point, Paramount had a way bigger market cap than at 2006 because they had, done a lot of private placements to raise money to drill, etc. So they had way more shares outstanding. So that's one thing you have to take into account. Okay, everybody, take care. I hope you enjoyed this one.